And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Friday, November the 12th. I'm John. Thanks for trusting me with your time. As always, we're going to be looking for context, good risk management, and patience. It's Friday. Happy Friday, everyone. If you're already in the markets, hopefully things are going your way. And if not, hopefully they will be soon. Fridays like to make a little bit of money and call it a day early sometimes. It was kind of a cliche in the S&P pit back in the day. Anybody that was still in the pit after noon to 2 o'clock on Friday was probably chasing money. So let's not do that. Let's have a good morning. This morning at 9 o'clock Central Time, we have the Michigan Consumer Sentiment, and we also have the Job Openings and Labor Turnover Survey. Maybe not that impactful, although we never know what is going to happen. If either of these come out far away from what's expected, we don't know what's going to happen. So far this morning, U.S. stock indices set to open higher, but still in value. It's going to be an interesting morning this morning, I think, as we wait for that economic data and we see what happens afterwards. Crude prices continue to soften. The U.S. dollar makes fresh 16-month highs again. The COP26 conference ended pretty much with a flop in Glasgow. I don't think it was necessarily worth the burning of the fossil fuels it took everybody to get there. Earnings, long list of earnings today, but we are nearing the end of earnings season. AstraZeneca, probably the largest stock, already out this morning with mixed results. As always, make sure you hit the lucky like button. Comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do go live. Quick look a few minutes ago at the VIX to dollar index and the 10-year yield. VIX down 17.28, slightly off its close yesterday. Remember, yesterday morning it was at 1776. Very patriotic. The dollar index down a little bit, 95.12 after the new overnight all-time, 16-month high, let's say. The 10-year yield largely flat, 1.55%. So we're always going to be, as always, looking for opportunities throughout the day. Yes. Got to say good morning, Kevin, first in the room. You win the prize this morning. Nico, George, Zerain, Ednelson, Frederico, Charles, George, Subconscious, Tone, Brian, my brother Rick, channeling his inner Matthew McConaughey this morning. All right. Yes, thank goodness it's Friday. Three Lions Insight, Patrick. Vince, good morning, Chris. Let's seize the day. Yes. Yeah, hey, Lacey. Chris says good morning to you. She's been a little restless this morning. Probably just happy it's Friday. Isaac. Jerry is awake. Hopefully John is too. Hopefully we all are. Clarence, Jeff, Mike, Trading Research. Good to see you. Anthony, Tova, and Sean Cunningham. Good to see everybody this morning. Carpe diem. Yeah, you guys are all full of positivity this morning. I love it. Let's have a kind morning. That's always nice. Good morning, Dr. VJ, Juan, and Juan, and Wen. It's always good to see everyone. All right, so A lot of our markets are opening inside extended trading hour ranges today. Yesterday, we know, was a holiday overall, Veterans Day holiday. Thank you again to all of you who are or have put yourself on the line to protect our liberties. And so that's the thing that sticks out to me this morning is we're a lot of markets opening inside yesterday's range, probably looking for that new information due out at 9 o'clock. I'm going to see what we have. All right, let me get things set up correctly here. As always, we start with the daily and crude. No particular order, just going left to right. Everybody knows the rules. One bite each. Let's take a look. Hey, that's better. Now we've got sound. Sorry about that. So we are in the teeth of rollover. Come on, Def. There, got the mic on. We got it now. Thank you all for letting me know. We are in the teeth of rollover. You guys, there's always a gremlin around here somewhere. All right, thank you. So, going back to the beginning here, we are in the teeth of rollover. We are still trading the December contract. Monday, I'll be trading the December contract. Probably on Wednesday, it will switch to January. I'll be monitoring that and letting you know. But we have to remember we are in rollover. The major players are more interested in getting their positions moved out of the December contract. If they're going to let them expire, they're going to be taking or making delivery of a lot of crude oil. So we're looking at this daily chart. We're in a medium time frame balance, perhaps a short time frame trend to the downside. We added 10,000 contracts yesterday on okay volume, especially for a holiday. That's not necessarily going to be presenting itself as directional information. The rollover, there's going to be those that are going to be using the spread, trying to work the bid or the offer to save their tick on their rollover. There are those that are going to be legging the spread. Now, it's very difficult to know if the increase in open interest yesterday was due to legging or any directional activity. So the volume open interest, always hard to read during rollover. It's one of the reasons why I think traders have a hard time in rollover. Open interest has been trending lower. Today's 10,000 open interest increase is the largest in a month. The 12th of October. Where were we? Kind of an undecided kind of day, but we did add a whole bunch of open interest that day, which the market was continuing its move to the upside. Now that makes sense. Adding 10,000 yesterday to me doesn't necessarily make sense. Technically challenged, absolutely. You got me, Rick. So this doesn't make sense to me. This makes sense while the market is continually moving up. This It's rollover. I can't read that much into it. So I'm going to be probably depending on short time information, which makes sense because largely we are in a medium time frame area of balance. We've got open overnight inventory to the short side. Most of our overnight traders have been getting short, looking at price moving lower, and we are going to be opening with a gap. Here's yesterday's regular trading hour session low. If we were to open now, we would certainly have that gap. So that's going to tell us it's going to tell us a couple of things. The market is opening out of balance from yesterday. And there may be earlier opportunities rather than waiting till later for better trade locations. If we get the chance, we'll watch that opening range trade because it may be impactful for us today. It may be helpful. We're never sure. Yesterday, we had the opening range look to the downside, and as soon as it got taken out, the move was to the upside. So that in that opening range, that information can be useful throughout the day. So we've got a gap rules. We can't close the gap relatively early. We're looking for opportunities to sell strength to see the market moving to the downside. I'm really kind of starving for visuals here. Our weekly kickoff low here, 77.85, is the next available naked point of control. We don't really have much above in near time frame. We've got one naked point of control down below that we could target. We've got a lot of space here. Look where we are inside the weekly kickoff range, right in the middle of it, and it's rollover. What to do? Well, we'll see if we can catch the opening range. But the market seems to be kind of starving for visuals. It's going to be kind of a random walk here. It's what that's telling me. Let's take a look at the E-mini S&Ps, and then we'll see if we can't catch the open in crude oil. It's one of the reasons I like doing this earlier, so we can watch that open in the crude. All right, we've got an inside day inside an inside day. The market seems to be coiling. We lost 5,000 in open interest yesterday. Not all that impactful, I don't think. It was kind of an indecisive, low volume day, half a holiday. So that you can see that we're putting in higher highs now, as well as higher lows. This tells me that this market is kind of coiling and that we may see a change coming soon. Let's look at the 30 first. Okay, so Wednesday, Thursday, today, overnight, still inside yesterday's overnight. I've got these trend lines on here just to kind of show the coiling that we've been looking at. Looks like we're going to be opening right around that level, but still in range with some overnight longs. So if by chance we were to leave the opening range at the low of the session and start pushing higher, that's going to kind of embolden these overnight longs to stay in or even increase that. We do have some information at 9 o'clock, which may mute some of the participation, but this seems like a kind of an important level. We've got 1, 2, almost 3 points of contact. The market putting in higher lows and lower highs. The breakouts of these tend to sometimes bring some decent opportunities. One thing I do want to point out is yesterday on the TPO chart, we left a poor low. In other words, the downside auction yesterday didn't necessarily finish. We had a poor low here, and we kind of a weak low here. So we're seeing off the highs excess and perhaps some weaker lows indicating that the market might not be finished in its downside auction. Of course, that can break. We don't have to go down and recheck that level. All right. Back to the 30. Anything else here? Triangle formation. Balance and breakout rules are gonna be in play here. We're in a short time area of balance that's been kind of falling in on itself. If we break out and get some legs, we're going to go with that. If we can't break out, we're going to be looking for rotational trade today. So kind of an important level here. It's kind of a bummer that it's not on the open here, but let's take a look at the crude oil opening range. Here's the 1 minute chart, which always gives me palpitations. We got about 10 seconds left. So we open with a gap. Here's our opening range. Opening range high, 80.18, low 80 even, an 18 tick opening range. We just took out the low of the opening range. We opened with a gap. We have not closed the gap. We've now left the opening range at the high of the session. It can mean sellers off the open. If you remember yesterday, we did the same thing. We looked lower, and as soon as we took out the high of the opening range, we started moving pretty steadily higher. Things never happen exactly the same way twice in trading. Sometimes the market will give you the opportunity to come back inside the opening range for a cheaper execution. All right, we're going to move on from here. We may go back and take a look. Nasdaq. Okay. Inside range. Same as the S&Ps. Open interest lower. Volume, of course, holiday. We're looking at the same kind of coiling situation as in the S&Ps. Higher lows, lower highs. Take a look at the 30. So we are still inside our triangle, coiling, right in the middle of value from yesterday. Perhaps starting to test this upper trend line here. As far as high volume nodes, Charles, the point of control is the high volume node from yesterday. There's no multiple necessarily high volume nodes where we're going to look for repair. However, the day before was a big day of potential repair. So we would be looking at, the high volume nodes down here somewhere. Let's just call it 15,965-ish. And then the point of control all the way up here is that next high volume node, and it's unchecked. So that's 16,179, 16,180, let's call it, just to kind of round it to a nice big fat round number. Okay, so we're starting to see some test of this level. If we continue to hold up there, maybe an opportunity for us to the upside today. No lack of excess at the low in the Nasdaq yesterday. We had a lack of excess at the low in that weak low in the S&Ps. We're still holding below that opening range in crude, but I'm not really liking the lack of conviction. Gold. Okay. Yesterday, continuation to the upside. We weren't able to take out the previous day's high, but we did go from low to high on some pretty low volume, which is expected. Again, it was kind of a half a holiday yesterday. We did add 14,000 in open interest, which says there's still money coming into the long side here. Okay, we got an inside range. We talked about that on the open this morning. A lot of these markets inside ranges. The whole moving averages are now holding above price, which can be an indication of a slowing of momentum. Not suggesting that it's going to be an all-around turnaround, but the auctioneer may have to pander here for a little while to bring new participants into the marketplace. We've seen new participants in open interest, but though again with the momentum kind of showing signs of holding, we may start to fall into some sort of range-bound activity here. We're still looking at that 1910 swing high from back here as a next upside potential target. This is a whole lot of space. Whole lot of space. Take a look at the 30. Overnight shorts already, attempting to reconcile those shorts. We opened potentially with a gap, but it looks like we've now closed that gap. Let's look on the TPO chart to see that for sure. It looks like we still have a slight gap on the TPO chart here from between yesterday and today. And there's no real acceptance inside value from yesterday. So this gap high here, this high here looks to be a relatively interesting area for an execution. I realize we're a little bit late for that, but what does it look like here on the 30? Okay, so we have the low from yesterday, 1861, the high from the 7 o'clock bar, 1861.20, the 730 bar. The high is 1860, so about a 4-tick gap left there. Might be an interesting opportunity if we get another chance to see that level. Okay, we're still holding the low here of the opening range trade in crude. Let's move on to the last three here, and we'll try and keep an eye on that. Vince pointing out that gold took out both sides of the opening range. We may have to add all these opening ranges. All right, open interest rolling in strong for 2 days in a row. We added 5,000 in open interest on the breakout and hold below weekly kickoff low. The high from yesterday, not even back to the weekly kickoff low. We've been kind of one time framing for 3 days. We've got a lower high, lower low, lower high, lower low, lower high, lower low, and we are bringing in open interest. The volume, of course, not going to be great yesterday due to the holiday. So much of this depends on if the dollar starts to fall apart off its new 16-month high. Take a look at the 30-minute. No overnight inventory. Settlement was 114.51 and a half ticks. If I'm going to be looking for continuation to the downside, I always want to try and sell it against strength. So the overnight high looks interesting. It's kind of a low volume node from yesterday. If we can't hold that, then weekly kickoff high and into the point of control from yesterday looks like an interesting spot. As where we are right now, I don't see that there's any urgency. I'm looking for something to happen before I'm going to be looking into this. Let's look at the 10-year. Okay. We had basically a close on the weekly kickoff 2 days ago. We closed below it yesterday. We've got an inside day in extended trading hours again. One time framing for a couple of days. Nothing tremendous here. We're still on an inside day. Last week's low right here looks to be somewhat pivotal. We traded right down to it, closed near it yesterday. It seems supportive now. This pullback back to weekly kickoff low might be a good opportunity for us to start looking for a chance to sell strength in a market that is overall still pushing to the downside. We've got a higher low here. We've got higher highs here, but we broke out of that. The bigger picture still looks like potential weakness. Again, all of that depends on rates. The market basically closed yesterday, very low volume, lost 11,000 in open interest on this move to the downside. So I'll be looking for the market to hold below weekly kickoff low and start to build new business down here. I want to see an increase in open interest as long as we stay below weekly kickoff low. If we break out above it and we start bringing in new business, that's going to be a failure of this level down here, and we're going to change our tune a little bit. But for today, looking at the 30-minute chart, the settlements all the way down here. We had some longs that reconciled. We have some new longs, shorter time frame probably. We are open in regular trading hours, but this started before then. Here's yesterday's high is our high right now. Weekly kickoff also, an important inflection level. Even if it doesn't work, if I take a short up here and we get too far above it, I'm probably going to say, well, that's probably not going to work, and at least I can limit my risk, and I still have a market that's moving lower, and I get the chance to sell a strength. It'd be interesting to see how this plays out for us today. Let's take a quick look at the nat gas. Okay. So another inside extended trading hour range. Weekly kickoff level seems to be somewhat creating a degree of magnetism or balance. We had an open interest boost yesterday off this low, adding 6,300 on very low volume again. So I'm going to be kind of cautious in and around this weekly kickoff level. If we start to use that as a pivot, long above, short below, when these levels do become magnetic, it can chop you up. Let's take a look at the 30. So 50-70 weekly kickoff level. Yesterday, we added a bunch of open interest on the close back above it. We're testing back to that level. Settlements all the way up here at 15,149. Basically $5.15. Right back to weekly kickoff level. We had some overnight shorts. If the overnight shorts can't get above that, it might be an interesting opportunity for us, but we're right in the middle of value from yesterday. I'm thinking because of that, we may find better trade locations as the day goes on. So again, try and stay patient. All right, let's take a look at our, dagnabbit. Okay, so very similar to yesterday, the opening range was initially left at the low of the session, but as soon as we broke out above it, the market has become directional to the upside again. We've started to one time frame, at least for now, and on a very short time frame. So this is why I like when the market comes back into the opening range after leaving one side, because I can further limit my risk and make that decision. If the market continues to move lower, we're hanging with it. But if it takes out the high of the opening range, sometimes this is what happens. The market will head the other direction. I wasn't all that impressed with the participation and the confidence below the opening range, so I did not do anything. It's a subjective type of a trade. If you look at it and you say, I'm not really all that impressed. You can always get out of it. When I really like the opening range trade is when it opens, it leaves the opening range trade and barrels in that direction. Those are the best ones. So if that didn't work, I apologize. But nothing is guaranteed in futures trading. Turn this off. All right. Okay. The trials and tribulations of live streams. I always seem to get attacked by technology and gremlins. Yes, Rick, I have known you for a while. Yes, sir. All right. Okay, Michael. Well, good. I hope that if you did take that, you didn't stick with it too long. Good short, quick short. Mike's good. The two blue lines. Are you talking about on that 1 minute crude oil chart? If you're talking about these two blue lines, all that these two blue lines are doing is pointing out for the session the high and low of that first minute of trade, which is called the opening range. So sometimes when you see this and the opening range is left at either the high or the low, it can provide, number one, really good information of who's in control of the market right off the open. And you can also see some pretty decent opportunities. Now, the thing about the opening range trade is it's streaky. It's streaky. A lot of traders watch that opening range. Now, there's different opening ranges for different products. The equities, the opening range is 8:30 to 8:31. In crude oil, it's 8 o'clock to 8:01. In the equity, in currencies and gold and treasuries, it's 7:20 to 7:21. Okay. DBEEP for the first hour before the market opens is a solid opening range trade on the ES. Hey, that's good information. We should be keeping an eye on that because, this is something that has been working for DBEEP. You're welcome. All right. My take on binary options trading, it's interesting and fun, but I find it distracting when I'm trading futures. It's kind of similar, but kind of not. It's fun. All right. Okay, we got about, let's say, 10 minutes before equity open. Be ready. Just let the market come to you. Find that the best opportunities are ones that I don't seek out, the ones that kind of come to me. Be patient. As we mentioned, a lot of these markets are inside range, inside extended trading hour range, inside value. Stay patient. Better trade locations are likely to come. I'm going to take my deep breath. Good morning, Peter. Be ready. Be humble, grateful, and creative in your trading today. like going to a casino. Yeah, I didn't want to. I don't want to color anybody's thoughts about it. You know, it's another way to use the markets to profit. So it is that opportunity. Clem, you're welcome. Subconscious Tova, thank you. Tova Rain Song, love that name. So I'll be running down to the floor here in just a couple of minutes, and I mean that metaphorically, of course. And just have a great trading day. Finish strong if you can. Make sure you protect profits. Look for those asymmetric opportunities. Get ready for the weekend. Get some good rest. Have some fun. Spend some time with loved ones. Certainly be kind to yourself and be kind to others. Thank you very much for another great week. Another chapter in this year's trading book, which we're getting pretty close to getting finished. And we'll see you on Monday, 7:45 for the market forecast. Trade well.